Howdy there, folks. Got some stuff I want to share with you real estate wise in this video and these things can affect the stock market in the end. And I think it's very important we go over all this. There's a lot of concerning charts and different things I'll kind of show with you in this video here today. Okay. So first off, what you're looking at here, this is the Case-Shiller index for, home prices nationwide. This is the latest March of 2022, right? Now, obviously a normal real estate market prices kind of stair-step higher. You should expect real estate to go up over time, homes to go up over time, right? Land to go up over time, especially if you're in major markets. Like, that's normal, right? But obviously, I think we all know over the past, let's call it year and a half or so, things have been anything but normal and have been up in basically a straight line. And to even a more insane extent than actually what we saw in kind of like the 2005, 2006 time frame, which was just kind of an insane time period for real estate appreciation. This has been on even a more epic level in a shorter amount of time, right? And everybody's kind of seeing all this play out. Now, recently, we're starting to see signs that this could be very much coming to a close, essentially. So first off, mortgage refinance demand plunges 60% as rates hit their highest level since 2018. So rates are now starting to spike higher, and essentially refinancing is starting to go down massively. Now, this is one of the reasons a lot of people used to ask me about Rocket stock, which I'll say Rocket, I actually like the company in general. I just think they're going to be in a tough spot for this year and likely next year because most folks that already wanted to refinance already refinanced. This is something I would always talk about if I was ever, asked about Rocket stock. So good company. And probably a winner long term, but there's no doubt refinancing activity, which Rocket is a huge beneficiary of, that demand is going to be down in a massive, massive way for at least the next 1 to 2 years. 60% down. And the comps are tough, right? It could be down even more next year. These comps are going to be just absolutely ridiculous. And so now, as interest rates continue to go higher and higher, you're going to have less and less people refinancing because likely most people, if they wanted to refinance, they already did, right? Or we're in a situation where if they refinance now, it would be at a higher rate than what they're currently at, which is a huge, huge danger, right? Now, look at this. This is a very more recent trend here that should be even more worrisome to folks. So what we're looking at here is mortgage rates, which I know not a lot of people keep a track of mortgage rates unless they're about to buy a house, right? So mortgage rates entering this year was as far as a 30-year, which is what most people get. Some people get a 15-year. Some people get like a 5-year ARM, but most people, they do the 30-year. That's like the big one, right? And so going into this year, we are at about 3.2% interest for a 30-year. Now we're at 4.7, okay? 4.7 on a 30-year fix now. So, and some people are obviously, depending upon their financial situation and their credit scores and all those sorts of things, could be way over 5 now. And when you're talking about just each 1%, it's a huge difference in the payment you have to make for, basically a home. And so what this is doing, and the Fed obviously raising interest rates, is going to end up at the end of the day, it's going to make mortgage rates go up more and more. What this is going to end up doing, right? Is obviously going to slow down the housing market. It doesn't mean it can stop the housing market. It doesn't mean it's going to cause a crash for the housing market. But there's no doubt the more mortgage rates go up, the more you're going to slow the housing market. If mortgage rates climb to, let's just say some crazy number tomorrow, which is not realistic, but let's just say it happened. Let's say mortgage rates double tomorrow and they're 10%, right? 10% mortgage rate tomorrow. No one's buying homes tomorrow. Just no one's buying homes unless they have so much money. Like literally overnight, the housing market would be dead. Like literally in a snap of fingers, if something dramatic like that happened, where it just doubled overnight, everybody would say, "Yeah, I'm okay. I don't need to buy a house." Or literally a lot of people, most people when they go to buy a house, there's not a lot of wiggle room as it is. And so if all of a sudden you were to double the interest rates, like the housing market's done immediately, right? And then we would be in actually a crash scenario for several years. That'd be ugly. Let's hope that doesn't happen, but it's definitely, if these rates keep increasing at this rate, right, we're going to end up in a situation where the housing market's going to be very heavily damaged if this continues on. And the reason being, why are mortgage rates likely going to continue to climb? Why is at the end of the day, the Fed has to do with this. The government pushes through certain things that can make this happen, right? And the reason being is rents are going insane, right? And so remember, a lot of people have to rent. And I mean a massive amount. Rent apartments, rent homes, things like that, right? Like a massive amount of Americans, right? Rents are up 30% plus in many markets. And this is this is horrible, because where do most people spend the majority of their money? Either on a mortgage or rent, right? That's where the majority of folks' money go. And so if you're talking about a 30% increase in a matter of a year, you're talking about a situation that is just devastating for a lot of folks out there. And this is obviously, if you are somebody that's in office, you're a politician, and you're looking at this, oh my gosh, should you be scared of this? And I mean scared in a huge, huge way. Look at this, okay? Austin obviously saw a 40% increase last year. It's just ridiculous. Like, you can't even fathom that number. 40% over a decade. Okay, now we're talking 40% in a year. That's just, you can't even like fathom that number, right? New York was up 35%. Fort Lauderdale, 34%. Miami, 34%. Jacksonville, 32%. Portland, Oregon, 29%. Orlando, 29%. Dallas, 29%. Fort Worth, Texas, 29%. Tampa, 28%. Phoenix, I have a home in Phoenix, 26%. Vegas, I have a couple homes in Vegas, 25%. Cincinnati, Ohio, you got to be flipping my flapjacks. Like, I can understand Phoenix and Vegas places like that. Cincinnati, Ohio, 24%. That, if you are in office, okay, that ought to scare the living crap out of you when you see this, okay? Because this is, if you want to talk about something that is devastating to consumers and devastating to potentially people that could vote you in office or out of office, this is extremely concerning to you, because this is the furthest thing from normal. Like, if you ever went back in time, you told people they would have to see a 30%, 40% type increase in their rent year over year, it was never even a fathomable thing. And now this is actually happening in real life, and people are like, what in the world's going on? And so this is why, the government is going to try, the Fed, the government, it's all one thing at the end of the day. They act like they're all separate things. They're going to try to slow this housing market in a massive, massive way as much as possible, because of essentially the rent increase. And the more real estate continues to appreciate and go up, the more you can justify rent increases. And the more and more rent goes up, the less and less people that can afford it, and the more folks that are going to be very upset, right? That now they can't even afford their apartment, and they got to move in with family members or something like that, or friends, or try to shack, that is a bad situation, because we know wages aren't increasing 40%. We know wages in Austin, Texas did not go up 40% this past year. That's something we do know. We know wages in New York City did not go up 35%. We know wages in Phoenix did not go up 26% last year. That's not what's going on there. Wages are going up, but they're not going up anywhere remotely close to those sorts of numbers. And so that's bad, okay? Now, if we go back over a decade ago, there was a situation that was almost the exact opposite of this situation we have playing out at the moment, right? In my city that I live in now, Vegas, which I moved out here in 2015, so I didn't get to see the bottom of the market. The market was climbing out of that whole situation when I moved out here, okay? But during that situation, almost 1 in 4 Nevadans foreclosed on their homes, essentially, right? Made the decision to walk away from their home. And this was insane. And it was a little different than in past history, because some people couldn't even fathom walking away from their home, right? But let's put you in their shoes for a moment. Your home value is down 40, 50%. During that time, a lot of people lost jobs as well, and their earnings weren't there. And let's say your home, you're underwater 30% on it, 50% on it. Some people were down more than 50% on it. Why not walk away in that situation, especially if you couldn't see it coming back anytime soon, and especially if you couldn't afford the payments, which at that time we had the balloon payments, and that was a whole dramatic situation, right? And so, I mean, if my home even, right, if this home was all of a sudden 50% less valuable, and I didn't feel like it was coming back anytime soon, I'd be happy to foreclose on it. I'd be like, okay, yeah, you can have it, bank. It's like, I have no loyalty to that. It's not like I'm like, oh my gosh, this is like the home I'm going to live in for the rest of my life. It's like, whatever. Like, you just got to make a smart financial decision. And so for a lot of folks in 08, 09, 2010, they had to make that decision, right, to walk away from their homes because it was massively underwater. And then it meant, on top of that, if you couldn't afford the payment because you had some sort of balloon payment or something like that, of course, that's like the logical, good financial decision to do is essentially walk away. And a lot of those homes took a decade plus to come back to their levels. There's some homes here in Vegas that still actually have barely just came back to the levels in the past year or two. Like literally some in the North Las Vegas and whatnot were kind of like the most insane areas, I guess you can say, that didn't really hold value. Some of those homes like literally just came back in the last year or two. Okay. And, the housing crisis was 08 till about 2011. So that's just insane to think about, right? And so the government, they don't want this situation either. That's the tough thing. It's like they don't want the rents to continue to increase. We know that. But they also don't want this sort of situation where you get all of a sudden a foreclosure crisis. Because, that gets ugly on the flip side, right? And you go from a HUD economy that everybody's doing pretty well to all of a sudden a situation where everybody's getting foreclosed on. Oh boy, could that get ugly really, really, really quickly, right? Look at this. So this shows you Las Vegas. Basically, foreclosure rates, during that time period. So before that, 06, we were at about 1.5%. And next thing you know, it just started climbing. 4% foreclosed, over 8% foreclosed. 2009, 12%. That was the peak of the kind of foreclosures. And then it starts to come down from there. 10.8%, 7%. And then, obviously get to more normal numbers over time. But when you look at something like that the government doesn't want that on their hands either. So they're in this tough situation where it's like, if they kill the real estate market and we end up in a dominoes falling the wrong way when it comes to real estate and we end up in a real estate crash, right? Well, next thing you know, all the homeowners that have bought homes in the last few years aren't going to be happy about that. Not only that, you'd be in a situation where a lot of jobs would be lost, right? And that could take down the entire economy and take down the stock market as well. And so you end up with a whole other set of problems that's actually even more severe than the set of problems you have right now, which is already a big deal, right? And so if I think about like the home builder stocks and whatnot, I feel like that's why a lot of these stocks are kind of in no man's land right now. You look at a company like Toll Brothers. Obviously, they're putting up great numbers. The real estate market's been very strong. But when you look at this and you're like, okay, mortgage rates are skyrocketing higher. Homes are becoming less and less affordable, right? What are Toll Brothers numbers looking like in the back half of 22? What are Toll Brothers numbers looking like in 2023, right? If you think about Lennar, same thing. If you think about Pulte Homes, same thing. KB Homes, same thing. The only good news with a company like Toll Brothers is they compete on the high end of the market, of the mass home builders. They compete on the wealthiest tier. Like their customers have tremendously more money than any other home builder out there, statistically proven. And so that's good there, but still, that market can be hit as well. And so when you look at all these home builders, they're all in no man's land right now, despite being in an incredibly strong real estate market. Because investors are looking at this and they're saying, okay, yeah, great. These sorts of companies are doing great today, but mortgage rates are skyrocketing. Homes are not very affordable. So, could we end up in a situation where all of a sudden we get a foreclosure crisis, right? And think about, the real estate industry is such a massive, massive industry in the United States of America. Huge, right? One, when your home price is going up and you own a home, which a lot of people do in the United States of America, it's a great feeling, right? Your wealth is increasing. You feel more confident, those sorts of things. If 1 year your home's worth $100,000 and the next year, well, shoot, they might not even have homes in the United States for $100,000 anymore. If 1 year your home's worth $400,000 and the next year is worth $500,000, you feel wealthier, right? If you at all pay attention to real estate, you're like, gosh, man, I just made $100,000 on my home value. I've got $100,000 more dollars there. That's awesome, right? So that's a great feeling. And it also leads you to likely spend more money on your home to redo things. You could do cash out refis and stuff like that, right? Oh, maybe I'll remodel the pool. Oh, maybe I'll do something in my backyard. Oh, maybe I'll put paint in, because you see this thing appreciating. So you're much more likely to put more money in it, because it's not like a thing that's losing your money or not making you anything. You're like, hey, you know what? I'm going to do this, but I'm going to get more money than that out in value of it, right? And so if all of a sudden you talk about real estate starting to collapse, people aren't going to likely put as much money in their homes, which could obviously hurt even companies like a Home Depot and Lowe's and places like that. Think about all the realtors. Real estate's a massive industry. A lot of people make a lot of money off that, real estate transactions. The amount of realtors in the United States, that's one of the biggest professions, and all the underneath jobs that come from the real estate industry are massive. And as somebody that used to have a real estate related business, used to have my real estate marketing company, right? I loved it if my customers were in a great position and were selling a lot of homes. And you know why? Because the more homes they sold, the better they did, the more likely they're going to give me jobs, right? The more homes they're putting up for sale, the more photo jobs I'm going to have, the more likely they're going to want to expand their brand and do jobs like that. I was just one piece. What about all the other people in the mortgage industry, right? These are massive, massive industries, and there's so many direct and indirect jobs, right? And so if you talk about you're going to really hurt the real estate industry. You got to understand, you're going to hurt a ton of jobs, you're going to hurt confidence, and you're going to hurt overall ultimately you'll end up hurting the economy as well. And so, you know, I will say it, and I've said it before, and I'll say it again. I am glad I'm not in government, because these are the sorts of problems where it's like, what way do you go here? Okay, I know a lot of people make fun of the government and politicians and things like that, but I can tell you, you couldn't pay me enough for that job. You couldn't pay me enough for that job, because I'm telling you that, put yourself in their shoes. How do you solve this situation? Crash the housing market? Great. Okay, now rents are going to become a lot cheaper. Awesome. Okay, you crash the housing market, everybody's wealth just decreased massively. You just crashed the entire economy. So it's like, do you want rents down and a crashed economy, or do you want rents high and potentially an overbubbling economy? And so they have to be in the situation, the Fed, the government, the whole system, right? They have to try to, like, you know, do this perfectly so rents don't continue to skyrocket, but also so they don't crash the entire real estate market. I can tell you, that's a tough job, man. That's a tough job. And that's not a job I would want. I can tell you that. I don't care how much money you pay me. That's not a job I would want, because that's damn difficult. And, you know, I would love to hear your guys' perspective on this. Like, how do you thread this needle where you don't crash the housing market, you don't crash real estate, but you also don't have rents continuing to skyrocket higher or even bring down rents? How does that situation play out? Because I can tell you, this is going to be, if they can somehow have rents not continue to increase rapidly and chill out and real estate not crash, it would be magical. It would be absolutely magical if they can somehow find a perfect balance there. But oh boy, is that going to be a damn difficult thing. I can tell you that, okay? And so how this relates to the stock market is obviously, if they crash the real estate market, the stock market's going to get hit with that. There's no doubt about that. There's no debating that. If you go through a real estate crash, the stock market's getting hit as well. And so I'm hoping they you know, find a common balance here and don't crash the real estate market, because that's taking down the stock market as well. But man, that's a tough job, guys. So hope you enjoyed this video. Let me know your opinion. I'd love to hear from you guys as always. And if you want some free stocks right now, check out my pinned comment down there. That's to Mumu. Right now they're doing a deal where basically you deposit any amount of money, you get 3 free stocks right now. It's pretty darn amazing. So check out pinned comment. Much love and have a great day.